quality of the financial statements. This quality of the financial statements depends on the quality of the information presented on the financial statements. Quality of the accounting information is referred as accounting quality. So, what is accounting quality? Focus on the following two accounting quality issues. Accounting information should be a fair and complete representation of the firm's economic performance, financial position, and risk. Accounting information should provide relevant information to forecast the firm's expected future earnings and cash flows. High quality reflects economic information content. Conceptually, accounting numbers contain three elements: reflection of economics, measurement error, bias. Factors to consider when evaluating the quality of accounting information: economic faithfulness of accounting measurements and classification, reliability of the measurements when accounting choices exist in accounting standards, how the firm's choices fit its activities, reasonableness of the estimates made in applying the accounting standards, adequacy of disclosures, and credibility of qualitative discussions. When accounting choices do not exist in accounting standards, how the rules fit the firm's underlying economic conditions. High quality leads to earning persistence over time. A key quality of financial accounting information is the extent to which it currently captures conditions that will persist into the future versus conditions that are transitory. Accounting quality aspects to be considered. Earnings could be very informative about current performance and tell you that current performance is sustainable. It is considered high quality on both dimensions. For example, a big jump in sales and earnings this period because of new products that will continue to be successful for a long time. Accounting quality aspects to be considered. Earnings could be very informative about current performance and tell you that the current level of earnings performance is not sustainable. Again, this considered high quality on both dimensions. For example, the firm realizes an unexpected gain or loss this year, but clearly classified and reports it as non-recurring. There is no ambiguity because the gain is informative in that it will not likely affect future earnings. Accounting quality aspects to be considered. Earning could be informative about current performance but not informative, that is does not reduce uncertainty about the future. In this case, we have high current period information quality but low information quality for the future. For example, a firm experiences a sudden drop in cost of goods sold due to an unexpected reduction in the cost of raw materials inventory. The cost of goods sold measure is relevant and reliable for the current period performance, but this year's greater income does not help the analyzed forecast whether the raw material price decrease is relatively permanent and thus whether earnings are sustainable. Like that, earnings are not informative about current period performance but are informative about sustainability of future earnings. Here we have low current period information quality but high information quality for the long run. Okay, for example, earnings this period include expenses for pre-opening cost for new stores. The new stores are operational and are expected to be profitable in the future. Accounting quality special areas to be considered. First one is discontinued operations, changes in accounting policies, change in accounting estimates, impairment losses on non-current assets, restructuring and other charges, gains and losses from peripheral activities, and other comprehensive income item. Discontinued operations, a component of an entity that either has been disposed of or is classified as held for sale and represents a separate major line of business or geographical area of operations, is part of a single coordinated plan to dispose of a separate major line of business geographical area of operations, or is a subsidiary acquired exclusively with a view to resale. Changes in accounting policies. Accounting policies are the specific principles, bases, conventions, rules, and practices applied by an entity in preparing and presenting financial statements. Changes in accounting estimates. A change in accounting estimate is an adjustment of the carrying amount of an asset or a liability or the amount of the periodic consumption of an asset that results from the assessment of the present status of unexpected future benefits and obligations associated with and assets and liabilities. Changes in accounting estimates results from now new information or new developments and accordingly are not correction of errors. impairment losses on non-current assets. An impairment loss is the amount by which the carrying amount of an asset or a cash generating unit exceed its recoverable amount. Carrying amount is the amount at which an asset is recognized after deducting any accumulated depreciation, amortization, and accumulated impairment loss. And the recoverable amount of an asset or a cash generating unit is the higher of its fair value less cost of disposal and its value in use. Restructuring and other charges. Restructuring is a program that is planned and controlled by management and materially changes either the scope of a business undertaken by an entity or the manner in which that business is conducted. The treatment of restructuring charges in analyzing profitability and assessing earnings persistence is important because recessionary conditions often induce firms to include restructuring charges in their reported earnings for the current period. Gain and losses from peripheral activities and other comprehensive income, those things are we have to consider. And earnings management means it occurs when management use judgment in financial reporting and in structuring transactions to alter financial reports to either mislead some stakeholders about the underlying economic performance of the company or to influence constructual outcomes that depend on reporting accounting numbers. Methods of earning management. Accounting policy choice. Most common form of earning. Strategic choices of accounting policy. Accrual accounting means allows entity to delay or accelerate recognition of income and expenses, enable entity to temporarily adjust profit figures. And incentives to practice earnings management to create optimal manager compensation payments under compensation contracts, to create optimal job security for senior management, to create optimal lending environments, and to mitigate potential violation of debts conventions, to influence short-term stock price performance, to minimize or manage reported earnings, to prevent industry-specific actions and disincentives to practice earnings management. Earnings and cash flows over the life of the firm agree, so firms cannot manage earnings forever. Eventually earnings aggressively reported in early years must be offered by lower earnings or even losses in later years to compensate. Capital markets and regulators such as SEC penalize firms identified as deliberate earnings managers. Firms and managers who are perceived as poor practicing aggressive earnings management will lose their reputation for being honest and trustworthy among capital market participants and stakeholders. Legal consequences can result from aggressive earnings management as well as from earnings management that revert to earnings manipulation and fraud. So earnings management techniques: income smoothing, big bath, cookie jar reserves, like those. So income smoothing is there, big bath is there, cookie jar reserve is there. Off balance sheet financing, we have to know what is off balance sheet financing. So it's an accounting practice whereby companies record certain assets or liabilities in a way that prevents them from appearing on the balance sheet. So off-balance sheet financing is an accounting practice whereby a company does not include a liability on its balance sheet. It's used to impact the company's level of debt and liability. So off-balance sheet financing techniques are, we can say, like operating leases, sales and leased back, use of another entity for financing a special purpose entity. So these are the things we have to know about the off-balance sheet financing techniques, as well as the things we have to know about the assessing financial statements quality, because it's a very very important thing when we are going to do when we are going to assess the financial statement quality. Quality in the sense everything's need to be very perfect, like these are the things are considered. When we talk about the strategic decisions, strategic things also very much important in the relating part. So we want to know what are things are already there. So if we want to know what are the things go through by that author and everything, we have to complete the section. So otherwise strategic management unit has adequate human, sometimes they ask strategic management units has adequate human and physical capacity. We have to answer. Strategic management units has been formed for monitoring the process of implementation of the planning activities. Strategic management unit should have adequate human and physical capacities to carry out this evaluation process. All stakeholders of University of Visual and Performing Arts that have responsibilities, carry out each and every activity and evaluate the performance of those activities, and progress of performance evaluation has been reviewed by following committees. We take that for an example, that's all. Otherwise, vice chancellor, chairman, council members, register, deans of faculties, coordinate. In addition, even subcommittees also there. They have been set up compromising faculty representatives and administrative staffs to review progress of goals separately, and progress will be reported to the above committees once in 3 months. Perform all heads of departments, and they were requested to keep monthly progress reports on the activities relevant to their work spheres and report to the heads of goals. So page review meetings will be held quarterly, and the progress reports will be submitted to the university council at the end of the quarter. Like that, they have consider about that issue, so we have to consider also.